Hi, myself Anantu Ramesh. By profession, I am an ECTA tutor. I will be a faculty for the course Certified Finance Manager, which is accredited by Global Association for Quality Management (GAQM). GAQM is a bronze accredited US board. By pursuing this course, you will get an in-depth knowledge of the account, as well as in our class, we will discuss each and every topic using the practical case study so that it will definitely help you in order to apply your accounting knowledge in your daily life. And by pursuing this course, this will help you in order to build a milestone in your career by achieving more knowledge or in-depth knowledge. Okay, now let's move on to the course routine. When we focus on the course routine, we are covering 12 chapters in detail in our CFM. The first chapter is account. The second chapter is budget and managing money. The third chapter is accounting or merchandising transaction. The fourth chapter is measuring and reporting inventory. The fifth chapter is account. The sixth chapter is accounting mainly based on receivables and payments. The seventh chapter is adjustment for financial report. Eighth chapter is accounting and its use in business decision. Ninth chapter is recording business transactions in account. 10th chapter is completing the accounting. 11th chapter is accounting theory. And the last chapter is financial law. Okay. I will definitely share this PDF with you so that you will definitely reach in a conclusion how we will build a in-depth knowledge from this course and how this will help you in order to boost your career. Okay. So as you all know, before moving into the core concepts, first of all, it is mandatory in order to know the base concepts in order to start each and every course. So today we are just focusing on different type of statements that every student should know before moving into core concepts. Okay. So I already told you we are discussing different type of statements. The first statement is SOPL or simply the income statement. The second one is statement of financial position. Third one is statement of cash flow. And the fourth one is statement of retained. These are the different statements that we will discuss in our today's. Okay. So let's move on to the syllabus. Uh, So please do have it. First of all, we are discussing about the income statement. Okay. I already believe that you all know what an income statement. What is an income statement? Yes, it is simply a statement that we use in order to show how much profit or how much loss a company incurred in a certain period. For example, monthly, quarterly, annually. Or we can simply say it is a summarized statement in which we will show the income and expense of a business for a certain period. Okay. So, another thing we have to conclude here is if our profit or if our income income is greater than expense, then our company will make a profit. And if our income is less than expense, then our company will make a loss. Company will make a loss. Okay. Now the next thing we have to look here is we can further categorize our income statement based on the inventory cost. That is, first one is service income, service income, and the second one is sales income. Okay, so what is a service income? What is a sales income? Service income is simply the income that is derived when we perform certain type of service. For example, consider my cases. I am delivering class to you. You are receiving a service. That is, I am teaching you so that you are receiving a service. So I will receive an income. That is my service income. On the other hand, I am running a business and I am making a certain type of product. For example, I am making an earbud like this and I am selling this. So by selling a certain type of product, for example, receive an income, and that income is now as sales income. So how can we simply conclude that service income is an income that we receive by performing certain type of service by a staff, and sales income we will receive by providing certain type of product or selling certain type of product. Okay. And when we look into the service income, we can simply derive at the profit by deducting the expense from income. On the other hand, when we look into the sales income, there is actually an element which is known as cost of goods sold. So what is cost of goods sold? Cost of goods sold is simply the cost that we incur in order to make that good sell. For example, in order to make this product sell, I incur certain type of expenses, and that expense is down as my cost of goods sold. Okay, that is simply the inventory cost. Okay. So for our income statement, we have an equation that we need to state. And the equation is revenue minus expense equal to net income formula. So what is revenue? Revenue is simply the element that we earn from a business by providing certain type of service or by selling certain type of goods. Okay. Then what is an expense? Yes, expense is the amount that we incur in order to provide that service or the amount we incur in order to make that item sell. Okay, for example, phone and internet bill, insurance, or payroll, advertising, these all are example for expenses. Okay. The next thing we have to look is what is net income or what is loss. Okay, net income or loss is simply the financial result of the business effort during a particular period of time. For example, we can simply say like that, this is the amount that we generate by deducting revenue or by deducting expense from our revenue. That's it. Simple. And the one other thing that we have to note here is we will definitely reach in a profit or loss state. And by using that profit or loss figure, we have to apply that profit or loss in our equity session that we will detailedly discuss in our SOFP statement. As of now, you just be aware of this thing. Okay. Now, let's focus on some of the examples that affect our net income or net losses. Okay. So please do have it. The first one is revenue. Second one is advertising expenditure. Third one is repair expense. Fourth one is utility expense. Fifth one is features. These all are examples that we use in order to reach our net income. Okay. So here is a standard income statement. Please have a look. Yes. We will definitely start with a heading. Okay, that means for every income statement or for every P&L statement, we will have an heading. For example, consider here, it is a statement based on the company Acme Widget Inc. Okay, that means Acme Widget Inc. statement is this. Okay, so Acme Widget Inc.'s income statement for the month ended. Please note here, for the month. That means 13 period. Yes, we already taught. Okay. For the month ended February 28, 2020. Okay. So we start with the revenue. Okay. We have certain type of revenue. First one is widget sale. That means by selling that particular widget, we will get some revenue. Next one is widget installment. By installing that particular type of widget, we will receive some sort of income. Third one is interest income. We will receive some interest income from bank and like that, or that's it. Okay. So that we will get our total revenue. The next thing we have to look is expand. Yes. For example, rent expense, utilities, advertising, wages. These are different type of expenses for a company. So revenue minus expense will give you the net income or loss. For this case, our revenue is 22,000 and our expense is 18,700. So our net income loss here, it's not a loss, it is actually an income, and the income is 2,000. This is how we prepare our income statement. This is just a base introduction. We will detailedly discuss about this in our further class. Okay, so just be aware of this only. Okay. Now, let's jump into the next statement, which is balance sheet or statement of financial position. A statement of financial position is used in order to show how many or in order to show what a company owes and what a company owes as of a specific date. For example, we prepare balance sheet as at a certain date. Okay, that means for the SOPL, we have prepared it for a certain period ending. But when we focus on the SOFP, it is prepared as at a certain date. Okay. So what? So why we use the balance? We use the balance sheet in order to summarize what the business on. For example, assets. Asset is simply the business on, and what the business was. For example, liability. Okay, what the business owns and what the business. Uh, and if business own more than that of the business own, then the position of the business is good. That means if the asset is greater than liability, company is moving in a good position. But instead of this, if the company's liability is greater than that of the asset, is that good for a company? No, it is not at all a good sign for the company. Simply showing that company is in a trouble. Okay. So as that of the P&L statement, we have an equation for the balance sheet statement too. The equation for balance sheet statement is asset minus liability, which is equal to equity. What is asset? What is liability? What is equity? Asset means simply the element that business owns. For example, cash, office equipment, vehicles, tools, real estate. These all are examples for asset. Simply keep in mind, asset means what the business owns. And what is liability? Liability is the value that the company owes to others. For example, to the bank, to the suppliers. Okay. For example, consider like this. Account payable is an example for liability. Okay. Account payable. That means the payable amount that we have to pay to the suppliers. Okay. That is actually an example for the liability. And next thing is what is equity? Equity is simply the measure of what the business is worth. Simply the business worth. Okay, that means simply we can say like equity is equal to profit plus what the business owners bring into the business or what they withdraw from the business. Okay. My next question is from where this profit? Yes, this profit actually came from statement of profit and loss as we already discussed. Okay. And, and why we are showing this here? Yes, this is actually an element that we are showing under the heading of retained earnings. Retained earnings means simply the amount that the business retained after paying out its dividend. That we will discuss detail in our class. As of now, just keep this in mind. Okay. Now, let's look some of the examples for our assets, liabilities, and that of the equities. Okay. Account receivables, cash, equipment, account and payable, prepaid item, unearned revenue, vehicles, land and building, they accumulated individual depreciation. These all are examples for asset, liabilities, and that of the equity. Okay. And the next thing is our balance sheet can be further classified into two. First one is individual balance. Individual balance. In individual balance sheet, there will be only one company. For example, ABC. Okay. We are preparing individual statement for the ABC company. But on the other hand, there is consolidated, consolidated SOP. So what is a consolidated SOP? Consolidated SOP means ABC is a company and ABC owns shares in B. Okay. ABC on shares in BCD or ABC subsidiary is BCD. So that while preparing the SOFP statement, we have to show the BCD's balance sheet together with that of the ABC. As of now, just keep it in mind like this. We will daily discuss this using the case scenario further in our class. Okay. So this is what is a consolidated statement. For example, like this, ABC have or ABC subsidiary is BCD. And we have to show both in a single statement, and this single statement is known as consolidated balance. Now let's focus on current year's fixed asset or current asset and that of the non-current asset. Yes. What is current asset? What is non-current asset? Current asset simply means it is the asset that the business keep in hand. For example, cash and like that thing. Just for 12 months or simply for 1 year. For example, cash, account receivables, inventories. These all are examples for current asset. Okay. And what is non-current asset? Non-current asset is the asset that the business keep in hand for more than 1 year. Okay, current asset means less than 1 year. Non-current asset means more than 1 year. Simple as that. Okay. So what are the examples for non-current asset or fixed asset or permanent asset? Vehicles, equipments, machinery, land, building. These all are examples for fixed asset or non-current asset or permanent asset. Okay. Now, the next thing we have to focus is liquidity. What is meant by liquidity? Liquidity is simply the measure that how quickly a business can convert or a company can convert its asset. For example, land, building, by selling land and building, how much quickly business can convert its asset to cash. That's okay. How much quickly business can generate the cash. That we are focusing on the liquidity. Okay. So please keep in mind how much fast or how much quickly business can convert the cash. That much is the better for the company because, for example, we have a current liability. Current liability means less than 12 months. We have to pay that immediately, but we didn't have cash in our hand. But we can use our asset in order to convert into cash that is actually happening quickly in the company. So that company can pay that current liability. So our company is in a good position. But instead of that, consider like this. We have a current asset, but it is impossible in order to sell that current asset as of now. So that we cannot generate cash. So we cannot meet the current liability or we cannot pay the current liability. That is actually very worse for the company's situation. So this will definitely affect the company's goodwill. Okay. What is goodwill? That thing we will discuss further. Okay. As of now, this even some of the items that we can convert quickly into the cash are account receivable, inventory, fixed asset. These all are example for the asset that we can convert quickly. Purely depending on the company's position. Please keep in mind always. Okay. Now, here is given a standard statement for the balance sheet. Please do have it. Yes. So as we saw in the SOPL statement, here also it is starting with an heading. But what is the difference? What is the difference? Yes, in a SOPL statement, what we have written as heading? Yes, for the period, ended. But here, what we are written as at February 28, 2020. This should be always kept in mind while preparing the balance sheet and that of the SOPL. Because as we already told, one is for a certain period. Okay, so please look here. First one is asset, second one is liability, third one is equity. Okay. Asset means cash, account receivable, computer equipment, supplies. Actually, we will detailedly discuss these elements. That means the asset elements, liability element, equity element in our further class. And also we will solve the questions based on the case scenario. Okay, how we will get the cash, how we will get the account receivable. This all we will discuss detailedly using the case scenario. Okay, so as of now, just have a look. Yes. And the liability side, account payable, notes payable, total liability. Equity side, owner's capital, retained earnings, withdrawals and dividends, total equity. Okay. So assets, liability, equity. Okay, that's it. And here is an equation as we already know. Asset minus liability is equal to equity. Okay. By using this equation, we can formulate an accounting equation. Okay. Asset minus liability is equal to capital. Or either we can say asset is equal to liability plus capital. Okay. Why we are writing the equation like this? This is because in order to bring some type of asset into the business, we definitely need some fund. So, in order to raise that fund, we will further have some liabilities, or we have to borrow some liabilities, or the owner should bring some capital into the business. Then only we can purchase some type of asset in order to use in our business. So that's why we are using this accounting equation. So net asset is equal to capital. Okay. This is actually double entry. This is known as the double entry. We will discuss double entry in our further. Okay. Now let's move on to the next topic, which is cash flow statement. Okay. As of now, we have discussed about the SOPL and that of the balance sheet. Now we are going to start the cash flow statement. Okay. So what is the cash flow statement? Cash flow statement is a statement that is used In order to show the flow of cash, cash inflow, cash outflow of the business for a particular accounting period. Okay. So, how we can analyze this? We can analyze this using two concepts. First one is cash accounting concept, and the second one is accrual accounting concept or cash accounting method. And the second one is accrual accounting method. Okay, we will discuss this. As of now, just keep in mind cash accounting method and that of the accrual accounting method. Okay. By using these two methods, we will detailedly analyze the transaction that will impact our cash as well as our accruals. Okay. Now, let's do one thing. We can further divide our cash flow statement into three categories. First one is operating, second one is investing, third one is finance. Operating is simply the cash flow for our day-to-day operation. For example, customer revenue, tax payments, interest, supplies purchases. These all are standard examples for operating expenses. The second one is investing. What is investing? Investing is simply the cash flow generated from or consumed by the asset. That means it is the cash flow that is consumed or generated by using a particular type of asset. For example, sale of a vehicle or purchase of a building. These all are examples for investing activity. Simply we are investing somewhere or we are selling something that we have already invested. Okay. Next thing is financing. Okay. Financing is simply or financing cash flow is simply the cash flow that is generated from selling stock or bond or borrowing something. For example, cash flow that have been generated from purchasing some stock back or paying out some dividends or repaying money borrowed. These all are examples for financing cash flow. Okay. So I think you got the idea of cash flow statement. Cash flow statement is further divided into three. First one operating, second one investing, third one finance. Now let's focus on a cash flow statement in detail. Okay. Please do have it. Same as that of the balance sheet and that of the SOPL. Here also we are starting with a heading. Okay. And Richard's Inc. statement of cash flow for the month ended February 28. Yes, February 28, 2020. Okay. Always we will start the cash flow statement from the operating activity. Okay. To focus here, operating activity. Net income, add back non-cash amortization. Yes, we will discuss amortization, depreciation like that with detail in our class. As of now, just focus. Okay. So we will get a subtotal. Now, this subtotal is actually without working capital. So what is working capital? Working capital is simply the amount that the business required in order to run its day-to-day operation. For example, in order to pay to the employees or in order to pay the inventories like that. For example, account receivables, payables, inventories, these all are working capital. Okay, that means receivable plus inventory plus cash minus payable. Okay, this is our working capital. So we will get the total cash provided by or used by the operating activities, which is 5,200. Okay. Now, next we have to focus on the cash flow from investing activities. Yes, cash flow from investing activities actually we have purchased a computer equipment. That means which have purchased a computer equipment for 1,000. So that is actually our investing activity cash flow. Next thing is financing activity cash flow. Okay, financing activity cash flow. For example, we have received issuance of shares. That means from the shares, we have received some issuance. That is actually a cash flow. Next thing is Insurance of note payable. From the note payable also we have received some insurance. That is actually get we have received that. Okay, we have received that. So that is a positive balance. Next one is we have paid a dividend. So it is actually going from our hand. So that is actually a type of expense. Simply a cash outflow. Okay. So the total cash provided by financing activities is 8,700. So next we have to focus is what increase or what decrease actually happened in our cash during this particular period. Okay. Our cash flow has increased by 2,500. Okay. Our cash flow has increased by 2,500. Next thing is cash balance at the beginning of the period, which is here. Okay, I will discuss this. Please be carefully listen. Okay. Actually, this is a statement of 28th February 2020. Consider like this. For 2020, the closing balance is 2,500. Okay. Now we have to prepare the beginning of the period cash balance for 2020. Okay. Beginning of cash balance for 2020. How we can prepare? Yes, beginning balance or beginning cash flow balance will always be the closing balance of the prior period. Okay, beginning balance will be always the closing balance for the prior period. Like this, for 2020, closing balance is 2,500. Then the opening cash flow balance or beginning cash flow balance for the 2021 period will be 2,500. Okay. This is actually the opening balance. Always keep in mind. Okay. And finally, we will get the cash balance at the end. Okay. I hope you deeply or you understand the concept of balance sheet, SOPL, and that of the cash. Okay. Now, let's jump on to the retained earning. Okay. So, what is actually meant by retained earning? Retained earning simply the earning that the business earns by using the profit after paying the dividend or the business keep after paying their dividend as the name suggests itself. That is actually retaining for the company or retained earning for the company. Okay. So how we can prepare the retained earnings statement? Okay. Always we have a heading which is statement of retained earnings for and which in as at 28th February 2020. Okay. So we will start with the opening retained earning. Okay, opening retained earning. Then we will add the net income. From where this net income come? Yes, this is from the SOPL statement as we already discussed. It is from the SOPL statement. Okay, so we got the net income for the period which is 3,300. Then the total earnings will be 3,300 is our total earnings because opening retained earnings is nil or zero. Okay. And using that retained earnings, we have to pay out the dividend. That means from the profit, first of all, we have to pay out the dividend to the shareholders in order to make them happy. Then only furtherly they will invest. Okay. Otherwise, it will definitely affect the goodwill of the shareholder. Okay. So minus dividend paid, so that we will get the retained earnings. Our retained earnings will be okay. This is how we prepare our retained earnings. Okay. So in today's class, we have discussed four different type of statement. First one is yes, four different type of statement. First one is SOPL. Second one is SOFP. Third one is statement of cash flow, and the fourth one is statement of retained earnings. I hope you got the idea of these statements well. If you have any further doubts or any concerns, please get back to me. Okay. Now, Now, here is a self test that you have to do. That you have to do. This is simply the thing you have to. You have to identify whether an item is asset, whether an item is liability, whether an item is equity, whether an item is revenue, whether an item is expense. For example, I will tell you about the first thing. Wages paid during the month. Wages paid during the month. That is actually going from our hand, so that we can say that is actually an expense. That is actually an expense. So likewise, you have to complete all these. That means 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. These 10 items you have to do by yourself. Okay. So by doing this, you will get to know how much you understand the concepts that we have discussed in the class. Okay. So you have any doubt, you can get back to me, no problem. Okay. So that's all for this day. Hope to see you all in my class soon. Okay. So bye guys. Take care. Bye.